Our friends at Spot Gamma also point out that the 4400 strike is the biggest open interest strike for next Friday. So you can see that here with this, and this is what they're also calling their call wall right now. They've also got the volatility trigger has moved up. So that basically is kind of acting as a bit of a support zone. So we're kind of tightening in a 43, 45 to 4400 range, and we have seen the moves getting smaller. So it looks like the market is kind of starting to head towards a bit of a pinning scenario. You would need to see this call wall shift higher by people rolling up strikes, and you see a material increase in this to get more bullish, to think we're actually going to smash up through that call wall. But right now we're not seeing anything to suggest that. Okay, and we also got rates vol coming down. As rate vol continues to drift lower, that is going to help cross asset vol come down as we go into Thanksgiving as well, which is only a few weeks out. We do typically tend to see markets going a bit sleepy. So there's quite a lot of factors to make you think that realized vol could well drop off a cliff right now. And in terms of, we've said there's a lot of factors that will keep the market well supported. Well, now we've got a factor that's going to keep the market capped around 4,400 is this massive amount of gamma that dealers have. So when we do rally, they're going to be selling futures against that, and that's going to supply some of the street that is buying delta that's going to be supplied by the option dealers. Okay, so let's home in, the thing that I'm growing in conviction with is the idea that the S&P might be pinned, okay? So we had a little chat with Brent on Monday in our Monday morning meeting that we started to do every week. We were talking about this scenario. We've got this 4,400 area that not only is it a call wall, it is a resistance level in October that we projected. It is also the top of this downtrend from past highs if we were to connect the dots. So you've got quite a lot of kind of technical resistance in that area anyway, as well as you've got a load of open interest and a load of long gamma that the dealers have. So that is usually a recipe for the market to find some resistance. You look at the VIX, it had this massive move down from 23 to kind of sub 15, one of the largest weekly drops in the VIX that it's ever had. So that is kind of backing up the idea that dealers are just choking on vol right now, and obviously a lot of kind of fear factors in the market have abated at the same time. So that's why vol got completely killed. So we don't think the juice is in playing implied vol lower right now, but we do think there is potentially some juice in playing realized vol lower. So how do you play realized rather than implied? You concentrate on gamma rather than Vega, right? When you think implied vol is going to go down, you sell Vega. It goes down, you will make money. If you don't have that strong an opinion on implied vol, but you just want to earn theta and be short gamma because you don't think the market's going to move, you have to sell shorter dated options that have got a load of gamma on them and a load of theta, excuse me, for you to collect. So that is the idea. The risk reward is to play it from the short side, but not short Vega, short gamma. How are we going to do that? Well, actually, before we do that, looking at the dashboard, you might be looking at me scratching your head saying, well, we've got spot overbought, we're in buy puts, we've got vol collapsing, carry in negative, the front end's down here, and this man wants to sell options. What the hell is wrong with him? Yeah. The truth is, you need to, rather than just blindly following what the mean reversion dashboard is telling you, you need to think a bit more deeply, and you need to realize positioning and expiry cycles, right? That's what this is about, right? The price action and the moves in vol are making it very clear to me what the street positioning is. People can talk about street positioning all day long, but the evidence needs to say that that is true. Right? You can make assumptions about street positioning, but there is clear evidence from where vol is and how quickly it's fallen that the street is choking on long gamma. And when I get confirmation that the street is choking on long gamma, rather than fading it and saying, I'm going to buy a load of cheap vol like a nutter, which I would never recommend doing, cheap vol, low vol doesn't equal cheap vol. Right? Sometimes low vol is the best thing to sell because it's low for a reason, and in this case, the reason is everyone is on. Okay, so that's why we do things like this. For me, the expiry pin playbook is iron condor.